All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're talking about is QQQY, the Nasdaq 100 Enhanced Option Income Strategy ETF. There's no income strategy, but it is an income ETF. And the reason we're talking about it today is because it is the best performing high yielding ETF that I have in my portfolio. And what I'm going to do in this video is I created a little chart. What I have here is I have the buy price at which I bought QQQY. I also have the current share price. I have the amount of shares that I have all the dividends I've received, and the total return that I've received. So in this video, we're going to go over all of that. We're going to go over kind of what they do, obviously what they track being the Nasdaq, and I'm going to explain to you guys exactly why they have performed so well. And so if that does sound good, please do remember to subscribe. We're up to 3,980 subscribers. So please do subscribe if you haven't yet done so. And what I want to say in this video is I'm going to go over why it's performed so well and why the Nasdaq, obviously, which is the underlying stock that it tracks, the Nasdaq 100. I'm going to explain why QQQY has done so well. And the reason being, obviously, that I'm going to get into, if the Yieldmax funds can have the exact same kind of outcome in the underlying stocks, this would exactly happen for them because QQQY is a cover call strategy and they do write cover calls on the Nasdaq 100. And if stocks like Tesla or like Square or like Coney were to appreciate the exact same way that the Nasdaq 100 has appreciated in the past little while, then we would see the exact same kind of returns and honestly greater returns in QQQY, Tesla, and then SQY. So I just want to put that out there. But without further ado, let's get into this video. So first of all, the reason being why the Nasdaq 100 has, well, obviously not the Nasdaq 100 has performed so well, but QQQY, sorry, I'm twisting up my words here. The Nasdaq 100 has slowly appreciated from, you can see here, like late October all the way up to January, mid-January. It is slowly appreciated over time. And that is exactly what you want to see for a cover call strategy. That is because we're taking pretty much full advantage of the upside as it moves slowly upwards, and we're collecting premium because of the volatility to the upside, which are being paid out to us as dividends. Now, obviously, you can see here that kind of like in October, we had a pretty substantial run up in QQQY, which translated to a pretty significant dividend. Being their first dividend, it was $1.10. Now we can see here the run up kind of slowed in November. You can see here November 3rd, it did pick up quite a bit and kind of maintain this point. That's why we got a dividend that was roughly about $1, so still pretty good. You can see here going over to December. December started out, it went down a little bit, but then picked up really well here, kind of finished off at a decent high point, let's say about 17,000. That's why we received a dividend roughly 93 cents. Now you can see for the last dividend, it dropped off to 62 cents. And that's just due to the fact that you can see here, January, it kind of started here at about, well, I don't really need to zoom in that much, Yahoo Finance, but you could see here, it kind of started out about this like $16,700 marker and kind of just slowly appreciated there. So that's why we kind of had the less dividend. We also had a decrease in the overall share price, which can kind of affect the dividend a little bit, but nothing too crazy. Now, what I do want to say is although that the Nasdaq has kind of appreciated decently well over time, you can see here that QQQY, even though the underlying stock is appreciated, it's still kind of fallen. And the reason being is because of these high dividends that it's paid out. It's natural for these cover call strategy ETFs to be falling over time, even though the Nasdaq has literally done exactly what we want it to do. And the one nice thing is that QQQY has not fallen too much. You could see here, even on my chart, I have an average share price of about $19.27, right? So currently at, let's say, the Nasdaq has actually gone up a little bit, so I'm up a little bit more than this, but let's say I'm currently down about 6.88%. Well, you know what, with all these dividends that they've paid out, I'm actually currently up about 12.5%. See here, because I've bought 14 shares, I've been holding since September here, I've received all these dividends. I've received the $1.10, $0.93, 62 cents, which is equal to a total of about $3.65, a total return of $12.05 for the dividends added on. But you got to remember, actually no, this is with the total return is with this $18.03 share price. So my total return actually is 12 6.5%. Obviously here it says that I'm down about 7% or so, but my total return is actually 12.5, closer to 13%, just due to the fact that I've received almost $3 in dividends, and obviously added it to the current share price of $18.03. So that is why QQQY has been my best performing high yielding asset. It's because the underlying stock has performed so well. And obviously if we could see that in other underlying stocks, such as Square's underlying stocks, such as Tesla's underlying stock, and also Coney, we could potentially see those yields. And that is honestly why I continue to hold, because I do think Square long term is going to be good. Coney long term is a little questionable. I think it has some room to go down, but at the same time, I think it's still going to be around. But then also we have Tesla, which is at a current low point. I think this price should really bump up. That's why I'm not selling my shares. I'm just holding them. And I'm obviously currently not reinvesting. But this was just a short little video to show you guys what a good covered call strategy ETF or good underlying stock performance could lead to in terms of the dividends, but also kind of the capital, not appreciation, but the very slow depreciation, because it's still depreciated over the kind of past like 5 months that QQQY has been out. But you could see here the depreciation is obviously very slow, and that is exactly what we want. We want to hold on to these funds and keep the share price as high as long as possible, so that we can receive those dividends and not have to worry about anything like a reverse stock split or anything like that for a while. So this was just a quick little video on QQQY, and just to kind of show you guys all my dividends and my total return on the stock. If you guys hold QQQY and you guys haven't calculated your total return, you guys want to do that, obviously just leave a comment down below and I'll be sure to get back to you. But yeah, this is just a short little video, once again, just to kind of go over even what the Nasdaq does. The Nasdaq 100, it's a big stock index of the 100 largest companies by modified market capitalization trading in the Nasdaq exchanges. What does that mean? It basically means they are a pretty big, they're kind of like, they're not an index, but they are a big fund which holds technology, consumer discretionary, healthcare. You can see obviously they're big into tech. That is kind of like the Nasdaq thing, but they hold a couple other little things here. Mainly their top 10 holdings are Apple, Microsoft, Amazon, NVDY, Meta, which is Facebook, Tesla, Google, other Google shares, Broadcom, Costco, etc. So you can see they're heavy in tech. That's kind of like what the Nasdaq does. I personally like to track the Dow Jones, but this is just a little video on QQQY, the Nasdaq. And yeah, so I hope you guys did enjoy. Please remember to subscribe. We're up to 3,980 subscribers. I want to say today is actually the birthday anniversary of our channel. So happy birthday to us here at Honorable Investing. And yeah, I hope you guys do take care. I hope to see you guys in the next video. I hope you guys enjoyed, and I will see you guys later.